Good afternoon, everyone. I guess that was needed to wake everyone up after a post-lunch session. As you could see from that, 2012 was really an interesting year for India and the media industry overall. We suffered through some growth challenges, as people in print, television here will tell you. It was indeed a challenging year for advertising. But there were quite a few fundamental changes that will drive our industry forward in the coming years. Digitization finally began. We're going through it right now. We'll go through it over the next few years. Multiplexes became largely digitized. And several other changes which I think we're building a foundation for further growth on. So I'm going to take you through a recap of 2012 and then touch upon some projections for 2013 through 2017. We went to an 821 billion rupee industry. Advertising grew 9%, less than almost anybody had forecast. And digital advertising growing quickly, now forming about 7% of all advertising. Digitization as a theme, as we touched upon last year, has finally taken hold. I think the television industry is optimistic that digitization will take place as planned. We do anticipate some delays going forward in phase 2 as well. However, progress is being made. DTH is still adding subscribers. The film industry is expected to be largely digitized over the next 18 months to 2 years. And I think that is going to drive an extraordinary amount of growth, all these things across the industry. Interestingly, India remains a growth market both for traditional and digital media, unlike some of the Western markets where one is cannibalizing on the other. And we see some extraordinary growth in digital advertising, in music, which has come back finally after years of declining growth, and film, which had a stellar year. Siddharth is smiling, yeah. Language markets, or otherwise known as regional markets, continue to be drivers of growth across the board. I think these markets were recognized as growth markets in 2009 by the advertising industry, and this growth just continues to power forward. I think it's one of the few things that lifted the overall industry and overall advertising last year. Even our counterparts from Hollywood now, dub several of their films in regional languages, and it's become a big growth driver for the film industry as well. Digitization, like I said, began. CNS households is 130 million. Advertising was muted at about 7.8%, but subscription went to 14.5%. FDI was raised and regional continued its growth story, 12 to 15% growth. Print, again, regional to the rescue. The English market faced some tough times, but Hindi and vernacular closed to double digits. Some consolidation happened, but we're still a fairly fragmented market as an industry. And on the cost side, I think the continued rise in newsprint finally tapered off. I think it gave some relief to the industry overall. Film had a fantastic year. When we went, and for this report we interviewed over 110 industry people across sectors, and the film guys were all smiles, which was refreshing to see after years of some challenges that they've had. Domestic box office continues to remain the most important segment of this industry. The driver for growth is going to be the addition of multiplexes. However, I must add that the addition of multiplexes is delayed because they're somewhat dependent on the commercial real estate sector. Malls are not being built in this economy, or at least at the pace that we would like them to be built. Ticket prices did go up somewhat. Content, of course, is a subjective factor that we consultants don't really understand. But, the content this past year was appealing to all segments of the industry. The expansion of digital distribution to close to 100% in the next 2 years, I think, is going to be an additional lever for some top line as well as bottom line growth in this sector. Music was another comeback kid. While there was some decline in digital revenue because of the TRAI rule asking for 3 confirmations on collaring back tunes, etc., that dropped that piece of revenue by about 40%. But several other streams came on board. Online streaming. We saw last year that Flight from Flipkart and iTunes launched in India. So I think going forward, these are going to be some robust revenue streams for this industry. Broadcast licensing and even live entertainment. I mean, the growth in live entertainment was also very, very interesting to watch in this segment. Radio, I think growth driven by volume. And if you spoke to radio industry folks, last year it was all, when is phase 3 coming? I think finally this year's budget speech gave them some hope that it is likely to be implemented this year. But even more than the additional licenses that are going to get distributed this year, 839 stations, 294 cities, I think it's the accompanying regulations with phase 3 that I would really hope get through. And of course, with the right pricing mechanism for licensing. I think that is very, very important. I think there's a lot of debate within the industry on what pricing should be on this. VFX and post-production, again, mixed bag. VFX grew in line with the film industry. Still, a majority of the revenues do come from outsourced work overseas. I think we are in a competitively disadvantaged position with countries such as Malaysia, the Philippines, and even Korea to some extent because of tax incentives and other benefits that these industries get from their governments. So I think it's been an ask for the animation and VFX industry has really been at the door of the ANB ministry for years, and I think it's now about time some treaties were signed with the different countries, incentives given to really drive the growth of this industry. New media, 40% growth in advertising. Search still constitutes about 47% of desktop ad spends. Mobile is, of course, going to be the driver going forward. We have 174 million internet users and 44 million smartphone install base. There's a lot of excitement in this segment. A lot of you might have seen announcements of the soft launch of 4G. A couple of the providers have already done so. The big boy that everybody is waiting for is, of course, Reliance. And hopefully with that getting implemented this year, I think that is going to really change a lot of business models, drive a lot of growth if implemented correctly. Out of home, tough year. 2.4% growth, quite challenging across all segments of the out of home business. However, the transit business really grew. Transit is, all the billboards and signs you see in airports and stations and those kind of things. With the government looking at, privatizing more and more airports, the metro build out, I think we'll continue to see robust growth in this sector. But overall measurability remains an issue with this industry. I think there have been several attempts at the industry putting together an initiative around this, and hopefully we'll see some light on some of those soon. Some policy measures started to come together. Like Uday said in his speech, I think government really needs to get behind this industry. I think there was, with some of the backbone they've showed on digitization, I think that was a refreshing change, but I think a lot more needs to be done. FDI again was a welcome move. 2013, we remain cautious. We are still not out of the growth funk. We've obviously seen the signs of at least the tone in the government in terms of becoming a little more growth oriented, some more reforms coming through. So hopefully if we get to a 6.2, 6.7% real GDP number, we will see far better projections than these come to fruition. We will see some election spending going on, new product launches. There are close to 30 new auto launches expected in the next 18 months. Telecom, if 4G is launched aggressively, we'll see that category spending as well. And if we see the RBI lower rates between 75 bips to 1.25%, I think we'll see some of that come back. Looking ahead, 5-year CAGR 15% for the overall industry. I think our internet users are going to go to 496 million if some of these 4G plans, etc., and 3G pricing comes to fruition. Advertising, approximately 14% growth CAGR over the next 5 years, built on the foundation of digital distribution, phase 3 radio, theater screens, and of course telecom infrastructure. The big daddy in this equation. This is the projected growth, 5-year CAGR over sectors. Television, we continue to believe, will grow robustly. I think we're hanging our hats on digitization being implemented correctly, and some of those projections around subscription revenue increases coming through. I think some of that has started to happen in a few negotiations that have taken place, but hopefully this will become a lot wider. Radio on the back of regulation, print continue to be powered by regional, and films, although this year was 21% growth overall, we are hoping that is not an aberration, but it'll still have a healthy low double-digit growth going forward. Some of the other sectors, digital media continues to grow 32% over 5 years. Animation and VFX, 15%. Gaming and music. Again, music powered by digital. VFX and post-production, I think outsourced work will continue to be a big driver. Hopefully we will see a couple of homegrown successes. There have been several attempts in the past, but I think the tipping point is going to be when we'll have 1 or 2 animated hits of our own, which will really spur producers to do more in this segment. And digital, I think, will continue to contribute grow to 72 to 75% of the industry, and I think we'll move close to 100%, a few years beyond that. There are potential risks that can derail this growth. What are those? I think the challenge for phase 1 cities, I think a lot, at least Mumbai, Delhi, a lot of the seeding of the boxes is done, but digitization, the process has to be taken to its completion. I think, when packaging starts, ARPUs go up, is when the true benefits of digitization will start accruing to all the stakeholders. There is also a funding issue. This is a very capital intensive exercise. We have seen a lot of private equity interest, strategic interests now taking a look at this industry, and hopefully we'll see a few deals going forward. What else could go wrong? Phase 3 rollout. I think almost everybody has become a little cynical about Phase 3 announcements. Prashant's grinning in the second row there. But I think this time, hopefully, we will see the promise come to fruition. If, again, the licenses and the regulations really are what matter. Unsuccessful implementation of 4G. We saw it already with 3G. You know, everybody was really excited about 3G. We were jumping up and down 2 years ago in our report as well. But 3G didn't quite take off. You know, I know all of us in the room probably do have 3G on our phones. But beyond this room, you know, and beyond this SEC level is where we really need to get 4G. That's when the promise of 1 billion comes to fruition. Lack of necessary incentives and policy support. We hope not to see, you know, a peak and a trough and a peak and a trough kind of a cycle in terms of policy support. We hope that, you know, the government continues to listen and act on the recommendations of this industry. I think we continue to make the point forcefully that this is a big, big employment generator. Again, to reiterate Uday's speech, without having to go through the country's you know, general infrastructure bottlenecks, etc. I think this can be a real driver for growth in employment. And the overall risk, of course, is the continued low rate of economic growth. We do need to get over 6.2 to 6.5% to achieve these numbers. What do we still need? We need logistics and funding for successful digitization. I think we're looking at phase 2, probably a 9-month delay, maybe a little bit more to get to completion. Viable digital monetization models. So, you know, a lot of aggregators, telecom companies, everybody's kind of struggling. What's the right model? How do I get money for my content? How do I, you know, break the shackles of the telco that is taking 70% of my revenue? So print companies, increasingly video content companies, gaming companies, they're all struggling, and the right models will be found. But you know, the search, I think, will continue for the next couple of years. Robust measurement systems. I think that's another one that needs to be addressed almost across virtually all segments. Rationalization of taxes, obviously. Animation companies, treaties and incentives. Really needed to rescue this one. And quality content. 1.2 billion Indians. We only have 159 million radio listeners. This number should be, you know, north of 700 million. 176 million internet users. Again, this number should be north of 500 million. And 181 million press AIR. This again should be way higher. TV, of course. This should all be line on TV. So, tapping the potential. We need to ask ourselves how we extend our reach. How can we create a true connect and do it on an ongoing basis? And how do we influence and be an instrument of social change? Thank you very much.